Welcome to Part 1 of Stocks 101. What are stocks? If you're going to be investing in stocks, you should know what they are. Stocks are also known as equities or shares. By purchasing stocks, you are purchasing an ownership stake in a company. How large your ownership stake is depends on how many shares you purchase and how many shares have been distributed by the company and remain outstanding. By purchasing stocks in a company, you may be entitled to voting rights at shareholder meetings and any company profits that are allocated to shareholders. We'll talk more about these profits in a future video. Shares can be issued to buyers by private or public companies. Shares of publicly traded companies are listed and traded on stock exchanges. In Canada, you may be familiar with the Toronto Stock Exchange or TSX. There are other stock exchanges in Canada as well, including the TSX Venture Exchange and the Canadian Securities Exchange. Exchanges operating in Canada must be recognized by securities regulators. There are also stock exchanges in other countries, such as the New York Stock Exchange and the Tokyo Stock Exchange. To become listed on an exchange, there are certain requirements the company must meet, and to continue to be listed, they must provide public disclosure of material changes and quarterly financial results to regulators. In addition to stock exchanges, stocks can also be bought and sold on alternative trading systems and over-the-counter markets. Instead of buying single stocks, an investor can also buy units of an exchange-traded fund, or ETF, which are purchased like stocks on an exchange. ETFs are units in a fund of stocks, in which a fund manager selects the stocks based on a formula or set policy and charges a relatively small management fee to manage it. Now you know what stocks are and about the exchanges they are traded on. Next time, in Part 2, we'll look at how stocks make money and how they can also lose money for investors.